things that are like cult-like in terms of how people see Bitcoiners from the outside. You know, when you're a Bitcoiner, you don't just talk about money. You don't just talk about sound money. You start talking about ending the Fed. You're talking about ending government. Then you start eating meat, right? And then you start working out and you start getting more sun. This is more like a cult. And actually the one person that a lot of people have been pointing fingers to as like the leader of the cult is you. These guys are being crazy. What do you think about that?
I always like to begin with, I like to answer this by saying, you know, I've been a Liverpool fan for about 40 years. Anybody here a Liverpool fan?
Yes. So you are familiar with being in the cult?
Yes, I am. But see, what's interesting here is that 3 people out of 100 are Liverpool fans, maybe 4. If I'm running a cult, you'd expect that these people would have started supporting Liverpool at this point. But it didn't happen. So everybody who buys my book does not end up supporting Liverpool. But a lot of people who buy my book do end up eating meat and basically believing that a lot of things are lies. So I think what's the deeper connection here is ultimately all of human history, the vast majority of human beings that have ever existed have spent their life looking to do 2 things. Trying to eat as much meat from the biggest animal that they can find and trying to get as much of the hardest money they can find. This has just been what human beings have been doing. So once you break out of that fiat mindset where constantly your money is losing value and so you're constantly getting poorer, so you're constantly having to spend less money on the things that you buy, when you get into Bitcoin, you break out of the propaganda and you also break out of the economic cycle of inflation causing you to constantly try to degrade everything in order to try and survive. And now you start to upgrade things and you quickly realize that, yeah, I should eat more meat. And you start eating meat and you start feeling better. That's just the reality of it. And that's why you're going to fall down that vortex eventually. And just like with meat and just like with Bitcoin, the sooner you get in, the happier you'll be.
You know, Bitcoiners, we eat beef, right? So I heard they prepare about 20 kilo extra. They usually sell about 6 kilos per day. Well, today they went through, I think, over 65 kilos of beef. And it was all you guys. So impressive. Though I don't know if that's something to celebrate about, but yeah, impressive. Yeah. So we'll also touch on that topic today too. So yeah, let's get started. Good evening, everyone, and good afternoon, everyone. And today we have a very special guest with us. This is actually going to be, we actually intended to record a podcast session, just you and me. But then I got the idea of why not do it on stage with other people watching? And then why not make it an event? Then why not make it, a signing event? Then why not have lunch? And here we are, right? About 100 tickets and everyone is here. Please welcome Saifedean Ammous. Right. So actually, you need no introductions here. This is the Bitcoin Standard meetup. Everyone know who he is right now. But for anyone who might be watching this video later, maybe could you give like a short, brief introduction of yourself?
Okay. First of all, thank you so much for hosting me. It's wonderful to be here. It's my first time in Thailand, and I'm really grateful for everybody for turning up. I think, from what I understand, Thailand was the only country in which the Bitcoin Standard was the #1 best-selling book, right?
Yes.
Yes, correct, yes. I don't think it's happened in any other country. So thank you so much for doing your part in that. And I hope this is an excuse to keep coming back to Thailand and having more meetups and more events. Yes. So a little bit about me personally to begin. I used to be a university professor. I had a PhD in economics and I used to teach economics at the Lebanese American University. I came across Bitcoin relatively early on, and I spent the first few years being a stupid Peter Schiff photocopy, making all the stupid Peter Schiff arguments about Bitcoin and why it can't work and why gold is the only money and why all of those nerds don't understand money. I went through it all before Peter Schiff knew what Bitcoin... Well, no, he knew what Bitcoin was, but he was also making the same stupid Peter Schiff arguments. So then after a while I realized, okay, this doesn't make sense. And the later I come to terms with reality, the poorer I'm going to be. And that made me realize that, yeah, Bitcoin is something very important, it's worth paying attention to. And then I switched all of my research and writing to Bitcoin, and I focused on writing about Bitcoin, because that's what I was doing. I was an economist at that time, and I was writing, and I decided I was just going to write about Bitcoin, even though nobody cares in academia at that point. They cared even less, a lot less than now. They care very little now because they don't care, because, you know, their money is printed anyway. It's fake money. They don't need to care about real money. But they're going to care eventually, and it's also going to be less pleasant for them the longer they wait. But in any case, at that point, they didn't really care about this kind of stuff. So it was, I still decided that I was going to write about it because it was far more interesting than anything else. And also what helped me decide to write about it was that I was writing about it anyway most of the day, arguing with people on Facebook. And then one day my wife walks in and says, "Oh my God, I can't believe this enormous essay." She looked at my screen. "I can't believe this enormous essay you wrote is just arguing with some stupid friend on Facebook. You could be writing an actual book." And I remember looking at her and thinking, wow, she's actually right. I write so much on Facebook that if I stopped writing on Facebook, I could actually write a book. And from that day, I decided no more Facebook and no more comments on Facebook. You know, congratulations and thank you was the extent of my Facebook commenting in that day. No more arguments. My friends are free to be wrong. I'm just going to write a book about Bitcoin. And I wrote a book about Bitcoin, and that turned out to be the Bitcoin Standard. And it's now been translated to about 38 languages around the world, and I think it's sold more than 1 million copies in total across the world. Thailand has done its fair share of these, getting a pretty significant number of sales. So yeah, so thank you.
It's 56,000 actually. 56,000, and you know, with the new release, we actually re-released the book, so we actually expect you guys to buy another copy. The first version, the first translation was also my first attempt at translating a whole book, right? Yeah. So
let's just say every time Bitcoin adds a digit, you guys have to buy a new copy of the Bitcoin Standard, okay? That's fair, you know?
Yeah, so yeah. Let's make it
just
another
hit 100,000, so everybody needs a new copy now.
Mm-hmm. You mentioned you were basically Peter Schiff before accepting reality. What made you shift from shift?
Yeah. There are a lot of complicated answers and a lot of sophisticated answers that I could give, but ultimately the most truthful answer, I think, if everybody were to be honest with themselves, would have to be just what I call number go up technology. Is you're sitting there and you're just dismissing this thing and you're not bothering look at it, and you're hearing how people are saying it's going to hit $1, and you think that's ridiculous. That's 21 million of them. 21 million times $1. That's a lot of money. There isn't a $20 million demand for a stupid project by nerds to do something like this. So, well, maybe I wasn't even thinking about it that much in terms of when it was under $1. But yeah, I mean, when it was very low, you'd still be very skeptical of the idea that it can work. And the real measure for how it works in a very serious way is just the price. So regardless of what you think of it from the technical perspective, regardless if you think that you had a better way of making Bitcoin happen, reality is, as long as number goes up, then it's continuing to work and it's thriving and it's growing. And the smart and rational thing to do for anybody who hears about it is to use it and accept it as it is rather than pontificate about how to change it. I think this is really the turning point. So for me, I think I started to really pay attention to try and listen to what's going on when it started hitting around $1,000, because I'd already dismissed it much earlier and thought it would go away much earlier. And then around that time, I remember also reading an article about mining Bitcoin and how there are all these people that now started making something called an ASIC, an application-specific integrated circuit. In other words, a microchip specifically for mining Bitcoin. And for me, that's when it really dawned on me that this whole 21 million Bitcoins can actually be real. It's not just software that a bunch of nerds can change in 5 minutes, because it's a lot. It seems very expensive that they would make these machines that are connected 24/7, just trying to guess a random number to try and make Bitcoin. If they could cheat, if they could find a way of changing the money, inflating the money supply, they would have done that rather than go through this enormous, highly inefficient process of making money. You know, the regular way of making money is just you win a stupid election and then you control the central bank and you print money. It's a lot easier than, you know, buying mining machines to actually compete with Bitcoin. So the fact that it was hard, real money that needed real expenditure of resources, that really only hit me once I heard about ASICs. So at the same time, you know, Bitcoin was going up in value enormously, way beyond what I expected. And these ASICs were showing me that actually this Bitcoin thing can work. And I would say the third thing was when Silk Road website was busted in 2013 also, I thought this would be the end for Bitcoin. They're going to scare everybody away from Bitcoin. Nobody's going to get into it. And so I thought within a year or so, Bitcoin would be dead. And instead, Bitcoin went up about 5-fold after that. So a whole lot of humble pie had to be eaten. And I fortunately ate the humble pie at some point and stopped being a delusional old man shouting at the internet.
Cool. That would means that when you see people investing, you know, their resources, their time into creating something specific to actually mine Bitcoin and other stuff, you know, there are specializations, division of labor going on, and you realize that this thing could actually have real value. That would mean that you already sees the world from like the perspective of a free market capitalist or like an Austrian economist, right? But even back, I mean, before Bitcoin. So, I mean, Austrian economics is not mainstream economics. This is what I really want to you know, talk about how you actually got into that frame of thinking, even before Bitcoin became a thing. Because people start looking into Austrian after they got into Bitcoin. A lot of people changed their view of economics after they understand Bitcoin. But you were probably an Austrian before that. Is that correct?
Yes, I'd gotten into Austrian economics, I would say, around 2008 or so, 2007. Is when I started to read Hayek. Initially, I think it was Popper that led me down Hayek, and then Hayek led me down Mises and Rothbard. Around 2008, 2009 is when I was reading a lot of them, instead of finishing my PhD. But I, you know, eventually I still finished my PhD.
You would do everything except finish your PhD.
Yeah. Yes, at that point. But I still finished it at some point. But I think you know, for me at that point, it was the financial crisis which offered me a potential to meet this completely radical different perspective on the issue from what we were hearing on TV at that time, which was just very obviously a whole bunch of propaganda. You know, that's what your TV is for. But over time, I just became much more interested in reading Austrian economics because it made a lot more sense. When you read Keynesian economics, the impression that I was getting was you are reading it, it's almost like doing exercise in the gym, in that you're doing this in order to understand what this guy was talking about, but it's not going to help you actually in the real world. So it's quite similar to the exercise in the gym. You know, you're exercising your muscles to go through a mental exercise of trying to understand what this guy is saying. But then once you understand what this guy is saying, great. You understand what these bunch of people who have government jobs are saying to one another, which is, congratulations. How's that going to help you in the real world? It's not. And whereas when you read Austrian economics, you understand the real world that's around you as it exists. And it's very refreshing. It's really refreshing to just read things that make sense, that engage your brain, that have value in the real world, that have real applicability, where you're interested in learning because you're making these decisions in every day. It's not some obscure paper that is relevant only for showing off in front of your friends by saying that you've read this guy and you understand this guy or you agree with him or whatever. It actually helps you in actual real decisions. So this was the thing that fascinated me about it around that time. And it made me just keep reading it, even though I was in my day job, I was teaching basic Keynesian economics in the day job, but I still always would sneak in Austrian propaganda to the students. And, I teach them about time preference, I teach them about money, I teach them the differences. I'd help them understand Keynesian economics very well by explaining it to them in what it really is, which is I tell them, look, if this doesn't make sense, just understand, remember, this is all an elaborate excuse to print money. So if you're stuck, if you don't know how to answer a question in the exam, this is what they're doing. Just think, which answer leads to them printing more money and spending more of your money? And that's the answer they want you to arrive at. That's the whole reason this course exists. So that really helped them understand the macroeconomics of Keynes very well, I would say. And it gave them a window into Austrian economics while I sat there and tried to figure out this Bitcoin stuff. So for me, I think the key difference is there's the methodological difference, which is about human action, which is kind of boring. Let's not get into it. Now, the one that's more relevant for Bitcoin is the difference, applied difference in methodology when it comes to money. There's a whole difference in the way in which they approach money and they understand money. But the important conclusion is this: the important difference, in a practical sense, how it hits how the rubber hits the road in your day-to-day life, is the question of, does money have to be a creature of the state in order for it to work or not? And the Keynesian perspective is that government says what money is, and we all just follow that order. And the Austrian perspective is that the market says what money is. So this on its own is an enormous shift between the two. I think this one is the most relevant aspect of Austrian economics when it comes to perhaps most people's daily lives, because money is such an important part of our daily life. So if you think of money as being whatever the government is saying is money, then you are basically in the matrix. You're playing the Fiat game where you're collecting points. You're like a video game character who's playing a game, who's collecting points, and the value of the points are just always losing value. They're always declining. If there was a game like that, people wouldn't play it. Quite simply, they'd just move on to something better. But here in the real world, most people are taught to play that game because of education or propaganda. So then when you get to understand how money can actually function as a free market institution, how it has historically been a free market institution, and how the intervention of government in the money supply causes all kinds of horrible problems, all of this then basically would lead you to take very different decisions about how you deal with your money. And I think the most obvious and most important today is Bitcoin. And that's why I think people who are into Austrian economics are much more likely to get Bitcoin. And people who get into Bitcoin are much more likely to believe Austrian economics, because they see this thing, they use it on the wallet, they see it, it shows up on the blockchain, they check it, and it works. And they realize that they can send money halfway around the world with this thing, and it works, and the money supply is not being messed with, and it's just out there and anybody can use it. And once you see that that works, you can feel in a real sense that, in fact, this is money without the government saying it is money, and so therefore it's working fine as it is. So all of which makes me makes the Bitcoiner much more likely to think about money in this practical sense, and therefore I think it's a lot more beneficial. And that's why I think it's very useful for people to learn Austrian economics in a very practical sense. There are many reasons I can explain in my third book, Principles of Economics, which you guys need to start working on it. Come on, tell them. Keeps emailing them until they start working on Principles of Economics as well. They might as well. Yeah, in that book, there are all kinds of benefits that I can think of and I can explain in terms of why it's good for people to learn about economics. But I think the most viscerally felt one is understanding Bitcoin. If Austrian economics helps you understand Bitcoin, it's worth every penny. So do it.
Yeah, because when I talk to Austrian economists, one of the most common questions I have is, where did you become an Austrian? Because it turns out that no one discover Austrian from economic school, right? They can't discover it from the conventional universities courses and stuff like that. Another friend of mine, they actually stumble upon economics in a pub, in a bar, talking with a senior. So yeah, I mean, procrastinating while doing PhD it's a good way to learn Austrian economics, I guess.
The moral of the story, yeah.
Even before that, I mean, another thing that's also interesting is that you've got, is that your PhD or is it your master degrees in sustainable development? Is that the PhD?
Yeah.
That you were putting off before that, right? So what did you discover any like discrepancies or any things that make you think like, what do you think about sustainable development as a whole?
Yeah, it's a very complicated topic, but I would say around that time, I was trying to understand these kind of environmental sustainability issues from an economic perspective. And it was a very, as I was doing the PhD, that's what made me come across Austrian economics while I was trying to understand what it is that I was doing with the PhD and how I'm asking those questions. And it's what basically made me a libertarian, because I realized that this entire thing, it's not like a scientist who's out there studying reality and contributing important knowledge. It's just a manual for how to control people and take their money and rob them. And I saw it specifically in the topic of biofuels, of all things. I chose to write my PhD on biofuels because I wanted to just focus on something that was, to me, not something that was very emotionally important. I wanted to just study something from an academic perspective. And so I started from the perspective of how can we use biofuels to fix the climate, basically, and fix the weather, essentially, as most of these people think. And quickly came to the conclusion that the idea of government passing laws on biofuels is just a massive, giant waste of resources that's costing, in the US alone, billions of dollars every year, that results in enormous amounts of corn being grown, degrading the soil, creating enormous amounts of poisonous runoff from the soil into the river, into the Mississippi River and the Gulf of Mexico, and creating an enormous amount of damage to the environment, both in the soil and in the river and the water. And all so that people can feel better about themselves, that they're, fixing the weather or whatever they're worried about, controlling CO2 or whatever. And it's disastrous, it's terrible, and it's very beneficial, of course, for the corn industry. So this was the beginning of me kind of understanding how the fiat business works, even on something as biofuels that you might not think of as being all that interesting or important. It's a huge complex of lies and propaganda, and essentially a few people making a whole bunch of billions of dollars. And it's kind of like that in many different places as you begin to look. So that kind of prepared me psychologically, because, I mean, you could see the bigger picture when you were being cynical, but also when you were doing the PhD. I think ultimately in the academic focus, what you were getting to is from the from the perspective of a modern economics PhD, the question of how to manage the biofuels supply would be much more of a central planning question that comes down to a certain individual or government or person in a government authority getting to decide for others what they can consume and what they can't consume in search of goals that he himself finds valuable at the expense of the things that they find valuable. And there's a whole bunch of propaganda being given for why this is the case. But over time, what I found really powerful and compelling about Austrian economics is that all of these other explanations for why the government should get to decide this and that, and it's important because of the weather or because of the enemies or because of the foreigners or because of there are all these reasons that they keep giving. Over time, you come to the conclusion, or at least I came to the conclusion, that no, the institution of property rights is more important than all of those things. And you either have property rights or you don't have civilization. That's ultimately how it works. That's ultimately what it really comes down to. And so it's very difficult to then keep falling for the same propaganda over and over again when it comes to different reasons for printing money and devaluing your currency over time, I think. And then you simply take the Austrian pill, as they say. You exit the matrix and you start thinking in the logical way.
I actually had some experience in sustainable development myself. I did a master's degree in basically just sustainable real estate development. I did some research on that, and that's when I start discovering that things are not as it seems. I work on like the green building certificate program for Thai buildings and stuff. That's why I'm interested to ask about your past, where you were before you discovered Bitcoin, before you start understanding and becoming the author of the Bitcoin Standard, right? So yeah, we just took all of you back to the origins, and people would say like Bitcoiners are like climate denialist, right? These guys are ruining the planet. These guys they don't have any idea of how the real economy works. But as you can see, it's not an appeal to authority or anything. I just want to set like the context a bit straight, that we do have some experience coming from those exploration into those worlds that a lot of people are talking about. Now that you've become, now that it's been, I don't know how many years is it after you've released the Bitcoin Standard. It's been so long, right? Almost a decade. 8 years, right?
Wait, seven, sorry.
7 years.
7 years.
Yeah, so 7 years after that, and also with the release of the Fiat Standard, the principle of economics, you've set up Safe House. You've done your Austrian economic course on your website. How has life been different after the Bitcoin Standard, the book?
Yeah, I mean, Bitcoin Standard obviously has been, people tell me, what's your favorite book? I always say the Bitcoin Standard because it's the one that changed my life the most. Let's face it. So definitely changed a lot of my life. I quit my university job. I stopped teaching kids Keynesian economics. So that's good. I started teaching on my website a lot more kids and adults from all over the world, and a much larger number. And I think the best thing about it is that once the book started doing well, and several Bitcoiners were interested in the book, were interested in supporting my work, it made me realize that I just can make the jump away from academia in order to just focus my time on researching and writing on Bitcoin and Austrian economics. So this is what I've been doing since then, and I have really enjoyed the freedom that has allowed me, which is that I can just write what I want, I publish it myself, and I teach it on my courses, and I discuss it, and I get a platform that is much larger than what I had during the time when I was a university professor. And so I'm able to focus on what I think is important. And I think for me, the freedom here is to be able to be part of the market process. I think this is something that people underestimate, in that a lot of people will tell you, the whole idea that I'm a great artist, but the commercial art is silly and people just want silly things. But I think a big part of whatever commercial enterprise you do is being able to provide it for others. So it doesn't matter what your objective opinion is, it's your opinion. Ultimately, if it doesn't pay your bills, then it's not a worthy use of your time. So for me, the thing that was the most frustrating about academia was the fact that you were publishing stuff that was utterly irrelevant to everybody. You know, the stuff that is published in academic journals is read by very, 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 very few people. Very few people ever download academic journal articles and read them. There is an enormous inflation in journal articles, but that's what people do to keep their university jobs. So that for me was the most depressing part of academia. I enjoyed teaching, I enjoyed the schedule, and I definitely enjoyed the summers. So there was definitely some perks to that job. However, ultimately, the really frustrating part is that to keep your job, you need to publish, and to publish, you need to publish in academic journals, which are completely irrelevant. Nobody reads them, completely and utterly immaterial, whatever you publish in them. And that's just truly frustrating, and I think it would make me very unhappy. And on the other hand, when you're writing for people, when you have to actually sell things for people, whether it's your writing, singing, making statues, painting, making chairs, writing software, whatever it is, if you're out there doing it for others and getting paid by it, then you're constantly receiving the feedback from the market about what it is that they like, what is it that they don't like, and you're constantly able to change and improve on whatever it is that you produce. So therefore, people for me who are engaged in market production are much happier than people who are engaged in bullshit fiat production. And for me, this is, I guess, perhaps the most important thing that the Bitcoin Standard has done for me professionally.
Okay, right. I also came from an academic background, and yeah, we do share a lot of that. Right? I actually quit my university teaching job while translating the Bitcoin Standard, because when you get to that chapter, when you talk about, you know, you have to do this to keep the job, and it was like, yeah. And am I happy? No. Can I be happy somewhere else? Yes. So yeah, that's one of the many pushes that I get, you know, that pushes me to actually quit my teaching job, my full-time teaching job, and actually get into full-time teaching on, say, you know, YouTube, and start writing articles, translating books, and doing things that market actually demands, and you're getting paid for it. And as you said, that can actually bring happiness in a way that, you know, working in, say, academia or even in government, you know, official bureaucracy doesn't get you, right? Yeah. So if I know that, you know, there's a saying that an artist should never revisit his old works, but, you know, if there's anything that you would like to, you know, revise about the Bitcoin Standard, you know, it being the first book, what would it be?
Yeah, you know, at some point I discussed this with my publisher, and I thought I'd publish a second edition of the book, and he just said, no, you know what, just write another book. And that's indeed what I did. The Fiat Standard contained all of the things that I would have liked to include in the Bitcoin Standard, plus a lot of the feedback that I had gotten from people in the first couple of years after publishing the Bitcoin Standard. So I just generally think of the book as being a product of its time and place. And so for that, I'm quite happy with the Bitcoin Standard as it is. And I wouldn't really change much about it. I think if I were to say one thing that I got wrong in the book, I would say that I had said effectively that there basically is no blockchain function except Bitcoin. Mm-hmm. I think at this point I would say something like Tether is the only useful use case. And so I think, you know, I kind of got that right mostly, because, you know, there's a million uses for blockchain. I said they're all wrong except Bitcoin. So my answer was 1, and people thought the answer was closer to 1 million. The correct answer so far turns out to be 2. So I'm going to count it close enough. Let's call it the draw.
Well, it depends on how you look at it, right? You're 1% off, or 100% off, or you're just 1 off.
Yeah, or 1 in a million off, considering there are a million other blockchain uses cases, and then 30 million shitcoins. So I think, I was surprised at the fact that Tether managed to make Tether work, USDT. The fact that this thing actually works is stunning to me. I thought there's no way that they'd let them effectively run cryptography-based USD checking account. I thought there's no way. They're not going to make it cryptography-based. They want control over it. They want control over issuance of money. I was wrong. Turns out they're happy to just sell treasuries to Tether. So
even with all the verbal attacks, they're still selling treasuries.
Yeah, they're still buying treasuries. Exactly. The Tether people are buying, what is it now, about $150 billion dollars of treasuries. So they're like the 10th or 15th biggest central bank in the world, something like that. So so they're selling dollars, effectively giving the world access to USD bank accounts.
So now that you've mentioned Tether, what do you think would be the money used in, say, the Bitcoin Standard?
It's an interesting idea that just occurred to me, which I'm planning on discussing in a couple of weeks in my talk in the Bitcoin conference in Vegas. But let's run it by you first, see what you guys think. Basically, I think there comes a point, if Tether continues to operate as it does, which, it's done so for about 10 years now. So if it continues for another 10 years, it's going to buy a lot of dollars, and it's going to become a very big US dollar-based currency. But then, at some point, they're also buying Bitcoin, and then they have a significant amount of Bitcoin at this point. So if their Bitcoin stash keeps going up in value, which, let's face it, that's what Bitcoin does, and if their dollar stash keeps declining in value, which is, let's face it, that's what the dollar does, pretty safe assumptions here, eventually there comes a point when their Bitcoin is worth more than their dollars. And so let's say they have, $500 billion of USDT outstanding, and they have $500 billion of treasuries, and $500 billion of Bitcoin as well. So at that point, it becomes profitable for them to actually revalue the USDT upward. Instead of making it worth the amount of dollars that they have, there comes a point where they start revaluing it, where one USDT equals to 1.1 US dollars, or maybe 1.01. And then, of course, Bitcoin keeps going up, dollar keeps going down. Eventually, the USDT becomes some multiple of the US dollar fixed to Bitcoin. Then they fix it to Bitcoin. And that's how we transition from a dollar standard to a Bitcoin standard, through a Tether standard. What do you guys think?
It's a Tether, right? It's a Tether. It's something that links and help the transitions. Yeah. So I've never really looked at it from that perspective. I mean, I look at Tether as someone who buys treasuries, hold treasuries. Of course, they hold Bitcoin on the side, but I've never really considered Bitcoin in the strategy. That's really interesting.
I think one thing is that most people think of Tether as being helpful to the US dollar hegemony because it buys more US dollar treasuries. And there's some truth to that. Yes, it does help, but ultimately its competition is not Bitcoin. Its competition is central banks in the rest of the world other than the US dollar. And those central banks also buy treasuries. In other words, if USDT is going to eat up some of the share of, say, the Turkish central bank or the Argentinian central bank, because people are now using USDT instead of using their Turkish or Argentinian money, then that means less demand for treasuries by the Argentinian central bank and the Turkish central bank. So it's not exactly like Tether is adding more demand for the dollar. It's bringing in a little bit of demand, but it's mostly displacing existing dollar demand. So it's going to, yes, get a lot of people onto the dollar, but these people are already using dollar-based currencies with dollar reserves. So yeah, it's kind of bullish for the dollar a little bit, but considering just how much dollar printing is going on, they're increasing the dollar supply by 7-8% per year. Nothing stops that train. The dollar is going down. So you can bring on all of the Argentinians and the Turks and a lot of people from all over the world to join the dollar. But the US government is going to continue to print, and the dollar is going to go down. And it doesn't matter. Tether is not going to change anything, I think.
So just before we turn into like a Tether standard meetup, I just want to ask like one final question about Tether. What makes it different from like USDC or like other stable coins or even other, offshore dollars that the European banks have done before the financial crisis?
I think what makes it different really, again, just like with the question of Bitcoin that I was mentioning earlier, the number go up. It's also Tether's number go up. Tether's gone from $0 to $150 billion in 10 years, which I think is really something.
Which means they're doing something right.
Yeah, they're doing something right, and that's bigger than any other stablecoin by far. It's bigger than all the rest of the stablecoins. So I'll confess I don't know much about USDC particularly and about how it works, but just the market very clearly says that the world prefers Tether over USDC. And so whatever the reality of their use operationally, and I've never used USDC. I have used USDT, but I think the daily use of Tether is just far larger, and the quantity of liquidity that they have is far larger. So I think for that, it is very important. On USDC, I think all of these yield products that they attach to it for me makes it a lot more complicated of a risk. It's tied into all kinds of yield products, which I find to be a problem. Whereas I think with Tether, I really love the simplicity of just the dollar, and that's it. All you get is a dollar, which makes it look a lot more sustainable for me. But more concretely, if I were to say the turning point for me when it comes to Tether, specifically was in the year 2022. In particular, when there was first of all, in May, there was the giant collapse of the Bitcoin miners in China, and then the price crashed from about $60,000 to about $30,000. And then in November, there was was it in May? No, I think it was in the next year. It was in 2022. Sorry, the crash was in 2021. In May 2022, there was the Terra Luna crash. Yes, there was that. The Bitcoin crashed from 60 to 30. And then in November 22, there was the FTX crash, in which the FTX casino blew up. So during those two crashes, I think what really startled me was the ability of Tether to redeem what was truly insane as a quantity of money, because I don't think there is any other financial institution in the world that can redeem this amount of money over this short-term time horizon. I think if you went to JP Morgan in New York and you told them, I want $30 billion of the money that you owe me over the next 5 days, you would probably destroy the global financial system. There'd probably be nuclear reactors go off somewhere. Like the entire thing rests on people not coming and taking all of their money at the same time. So if people go to JP Morgan and just say, we want to liquidate $30 billion of our money, it would be martial law in the US, at least, It would be something really crazy. And yet Tether did that over a weekend from their pajamas, basically. And the ability of them to keep the peg, that at no point did people's expectation of Tether become significantly lower. And they continued to channel billions and billions of dollars to all of the exchanges that use Tether around the world to redeem all the demands for Tether was really something. I think that you have to admit they were doing something right. It was at that point that I thought, okay, as somebody who lives in the third world at that point, I would rather use something that is like Tether than most third world central banks and most third world banks. I think, probably Thailand, generally the central bank here has done a relatively good job, I think, compared to other countries. You guys have generally had it okay, relatively, right? So the baht is only 30.
Relatively.
Yeah, it's only 30 to the dollar, but like 50 years ago, it was 10 or 15 or something like that. Yeah, something like that.
25. It was fixed to 25 for quite a few decades before we let it just free float.
Yeah, exactly. So 25 to 31, that's basically nothing by 20th century standards. You guys are coming off really good monetary
But we're
experiment.
not factoring in the price of things.
Yeah, well, the dollar is going down, obviously. Yeah. The dollar is going down. So everybody is ruined by the dollar going down. But for most people outside the US, they get the extra bonus of their central bank adding the local ruin of the hyperinflation, which in most cases has exceeded 99%. And most currencies that are out there have lost 99% of their value against the US dollar. So if you've only lost 50% against the US dollar, you're basically in the top 15, 20 currencies in the world. So congratulations, I guess.
I mean, it's a blessing and also a curse at the same time, I guess, because with the central bank being able to manage money in a way that, it's relatively good compared to other countries. I mean, we have listeners coming from Laos today, and a lot of things are going on over there, like from Myanmar. Thailand is doing relatively well, but that also means that people are not being, forced to learn about what actually is money because they're just fine, right? They're only being recently being forced to face reality with the rising price of everything in the recent years, and that kind of put a lot of people, behind compared to other countries where the government actually just screws them over faster.
Yeah. I initially used to think that places like Lebanon and Venezuela and Zimbabwe would be earlier onto Bitcoin because of the problems that they have. But I think it turns out that that is probably not true. It turns out that places that have a lot of savings are going to be more interested in Bitcoin. I think more than places with hyperinflation, places where people have the concept of you keep some of your money aside and save it for the future, which surprisingly enough is probably less than most of the world. Most of the world lives day to day, basically hand to mouth. Most people have no conception of this idea of you just keep money for the future. Like what, you don't spend it? You just have money and you don't spend it? It sounds like an alien concept for most people. And I think this is the main hurdle rate that Bitcoiners meet with trying to orange pill people, that you're trying to solve a problem that doesn't exist for them. They never have a problem of inflation because they never have a problem of money, because their money is constantly disappearing. So they receive the money and it constantly goes away. So in a sense, they're free from the problems of inflation, but in a more real sense, they are in fact the personification of the problem of inflation, because it's precisely because of the money being broken that they are highly likely to spend the money and live in this kind of high income, high expenditure, high stress life rather than accumulate savings. So it's difficult for them to understand the extent of the problem of inflation. But I guess, I guess this is where my book can work, because it begins by explaining that problem and showing how historically, with gold, and everybody can relate gold to gold as money. Everybody has heard of gold as money. When gold was money, the value of gold increased over time. And so if you expected the value of your money to go up, you're likely to save more. And then a switch flicks in people's mind where they start thinking, okay, well, if I saved more, how would my life be? And at that point, they go down the Bitcoin rabbit hole.
But then people would ask, who's going to invest, right? Because if you start saving money, then who's going to invest in things?
Yeah, well, I think there is the new answer that I have come to, and this is kind of a more meta answer than what I would have in the Bitcoin Standard, is that, well, in the Bitcoin Standard and Principles of Economics, what I would say in general is that there is a market for investing, there's a market for saving, and so people naturally just choose the market commodity that is the hardest to inflate, whose supply is the hardest to increase. They choose that as their store of value, and that ends up storing value better than everything else. And then they will invest in other things when they expect the return on those other things to be positive. Now, when these other things have a positive expectation, then you dishoard some of your savings and you invest. And you generally would expect to make a positive real return. So people who take risk with investment end up with a bigger cash balance than what they start with. But more recently, I think the way to think about it is that when you think of it this way, it may well be the case that we end up with a much larger stock of savings in the sense of people keeping money on hand, either in the form of physical gold or the form of Bitcoin, in cold storage. We may end up with people just, keeping 20 years expenditure as saving, and that's just normal. Middle-class people can stop working today and have 20 years of living like they live today every year, and that's just normal. And people just have very large amounts of savings. And I think the key insight to remember is that what matters for the process of economic production is actual capital goods and not nominal quantities of money going toward investment. So we could think of this inflation-driven boom of the last century as being one giant misallocation of capital, where everybody is taking money out and investing in things that they don't understand, and thinking that, we're pushing the economy forward because everybody's investing. The dentist is investing in Apple, and the athlete is investing in Apple, and the old grandma is investing in Apple. And all of these people are putting their money, and it's helping us have more iPhones so that these same people could have iPhones. But ultimately, what makes us have iPhones, what makes us have production process is the saving, not the investing. It's not the money. It's not the capital account. It's not your saving account sending cash to your stockbroker that is concretely causing the phone to exist. The reason the phone is existing is because capital goods are going to the phone. So somebody somewhere is building a factory today that's going to be producing phones for the next 15 years, and they're going to get paid for that factory over the next 15 years. So they're foregoing consumption today. That's what matters. What matters is not the stockbrokers generating large amounts of cash to buy the machines that he needs. What matters is the engineers and the machines being available. And so when we save more, that means more engineers are available for these factories, more raw materials are available for these factories, more machines are available for these factories rather than for consumer-facing goods. And so therefore, these things become cheaper, and the amount of investment that we put in, whatever it is nominally, in nominal terms, doesn't ultimately matter because we have enormous amounts of saving. So in other words, what happens is a complete and enormous revaluation of capital into a much lower cost. In other words, capital goods become a lot lower cost because few people are investing in nominal terms, and a lot more capital is being generated because people are saving. And what ultimately matters is saving. What ultimately matters for production is people saving, delaying consumption. That matters more than people sitting in offices and sending emails to one another in order to, call themselves serious and Mr. Investor. The foregoing of consumption today is what generates production. So the more consumption we forego today, the more engineers, office space, and cars and machines and equipment is available for the production of apples and oranges and Apple iPhones and computers and tables and cars and everything, the more that stuff is available. And maybe the correct answer is that that stuff just continuously gets cheaper, and that's a good thing. That's what we want. We want capital to become cheaper. And this investment, this high velocity economy where people are just constantly consuming and spending and spending and consuming, it's not generating more production in the real sense. I think a good metaphor to think about it is that capital production is a highly intensive process. Think about it as similar or analogous to building a jet, an airplane jet. So if you're going to build a Boeing, it's very easy to build a Boeing, right? Who here hasn't done it? No, it's not easy. If we all just went to Boeing factory right now, there's 100 of us here. If we all went to Boeing factory, we'd get out in 10 years without having built a Boeing. Let's face it, right? And for me, this idea that everybody needs to be investing, that everybody needs to be allocating capital, is similar to saying everybody needs to go down to the airport and start building a new airplane. No, the efficient way of getting an airplane done is to have competent people, hire people, engineers, workers, people with qualifications and experience in this stuff. So would you rather buy an airplane that is produced from 200 workers and engineers, or an airplane that is produced from 50,000 random people from Bangkok descended on the airport? Which airplane would you rather fly in? Right, the 200 engineers and workers, obviously, right? 50,000 people, no matter how smart they are, you know, unless they're selected for the job of the airplane, and specifically with the knowing that we get all the competencies we need, I wouldn't trust it. So I think similarly of the process of capital allocation and capital production. People need to save. They don't need to be allocating capital. And that's what we need to do. The limiting factor is not dentists sitting in their basement trading stocks and allocating capital between Apple and Facebook. The limiting factor is dentists foregoing consumption. So as long as they forego consumption by buying money instead of buying consumer goods, then the capital goods go away from consumer-facing production to higher stages of production. So instead of people working as waiters in restaurants, people go work as engineers in factories. And so the lack of consumption today is what creates that capital. That's how I would think of it.
Perfect. I mean, and if that happens, what we're going to see is like lower nominal investment amount, right? Because actually money is going to be worth more, things are going to be cheaper, and what we're going to see is maybe we can maintain like the same nominal amount of money going into investment, but we're getting more production out of it. And what's important is not how much money is going in, but how much productions are getting produced, right? How much new companies, new entrepreneurs are created every day because of, you know, accumulation of capital goods, right? So in the Bitcoin standard, this is going back a bit, but like in the Bitcoin standard, in the Fiat Standard, when you talk about life or the world after Bitcoin, after the Bitcoin standard, a lot of time you would mention or, you know, refer back to how things were in the gold standard. I've been getting quite a lot of criticisms here about if we are over romanticizing the gold standard. Is life actually better back then? Is innovation actually better back then?
Yeah. No, of course, life is definitely better now in many fairly objective criteria on which pretty much everybody would agree. We have sanitation, we have electricity, we have internet, we have communication, we have much higher life expectancy, much lower infant mortality. There are just many ways in which things are better than the world of, say, 1880. Having said that, that does not mean that everything today is better. And I think the problem people fall into when drawing historical analogy is being unable to think of an idea as complex as saying you like one thing better in 1885, but you don't like children dying of typhoid. You know, you're not endorsing typhoid by saying that there was something nice that we could learn from 1885. They built nicer buildings in 1885 in America, definitely, than in 1985. That does not mean an endorsement of all the diseases that used to kill people in 1885. So I think for me, the interesting and important aspect of it is the dynamism of a society in which people have savings. This is the point that I mentioned in the Bitcoin standard and in the Fiat standard, and which I expand upon in my next book, The Gold Standard, which is taking a little too long to finish, and I apologize for that. If you made the pre-order, I'm sorry, but it'll be out in a few months. It's taking a little longer to complete. But basically, The Gold Standard is an economic fiction book. It's an alternative history in which fiat money dies in 1915, and we spend the 20th century on the gold standard, proper gold standard that gets rid of all the problems of the previous gold standard. And then I imagine the utopia that unfolds in the 20th century where the world doesn't have to deal with fiat, and how better and different the world would be. And I think one key distinction is you would see this spirit that you saw in the gold standard countries, which were the industrialized countries toward the end of the 19th century. You know, primarily the US, Canada, Britain, France, Switzerland, Germany, Italy, Spain, and these countries specifically, they had an enormous amount of capital investment, and an enormous amount of invention. This was the most transformative period of the world. Everything that we think of as the 20th century, practically, well, not everything, of course, but most of the things that we think of as 20th century technologies were invented in the period between 1870 and 1914. And that's when the world was on the international gold standard, which emerged out of no treaty. It was just emerged out of all these governments giving up on trying to control the price of gold and silver and just conceding defeat and just going by the market choice of gold. And when governments gave up and started doing that in 1871, they unleashed the biggest tsunami of peace and prosperity and development and transformation that hit humanity ever. I mean, industrial revolution really took off then. Investment took off all over the world. Capital began to spread all over the world, and everything really began to improve drastically. And the 20th century was the time when these technologies spread around the world. And unfortunately, they quickly learned from their mistake, and they realized, there's more to be done in life than just enjoy peace and prosperity. Let's profit from war and destruction instead. And so they started World War I, and then the world has been at war ever since. And it's destroyed that process of capital accumulation and capital diffusion and invention and increased productivity, which had really kicked off. I shouldn't say started earlier, but 1870, because all of those countries were on the gold standard, and so they could all trade with one another. When Germany switched to a gold standard specifically in 1870, that's it. It was the majority of the world economy was already on gold. And so it was it meant an enormous open market where people could move things around, and it was pretty straightforward to move money in and out. Capital controls were relatively minimal, trade controls were relatively minimal, and it unleashed incredible improvements in quality of life and industrialization. And that's when we got the car, that's when we got the airplane, that's when we got the elevator, that's when we got the subway. That's when we got the X-ray. That's when, in the Bitcoin standard, I mentioned these, I list them, and you could keep going. Baby incubators. Basically, the vast majority of things. You could argue that computers and telecommunication came from that period too. The telegraph and telegram and so on. So, and then there's a very interesting paper which I came across, which looks at, there's a book in which two authors compiled the 6,800 or something most important inventions in history. Those 6,800 inventions. Think of the 6,800 most important things invented in history. They collect a list of all of those things. And this guy goes through that list and generates a data set of invention by year. And then he looks at that compared to population, global population. And he finds that the end of the 19th century, that period that we mentioned, was the high point for humanity for inventions per capita. We hit the high point since then. Obviously, population has grown enormously since then, but innovation per capita has dropped since the late 19th century. And I think there's a significant amount of research that shows in many countries we see drops in IQ. I think English people, for instance, because they used to measure intelligence, English people 100 years ago probably a lot smarter than today, and 150 years ago probably as well. There are some objective studies on this. I think Fiat has really degraded humanity.
I like the term invention per capita, right? And when you think about it, the most important thing that would drive actual invention per capita is actually the amount of stored capital goods and savings that a person have, because you can't really get down to inventing something if you don't if you're still living paycheck to paycheck, if you're still living day to day, right? I was actually trying to lead the questions into the gold standard, but now that you've already mentioned it, that's your next book, right? How many people here have already pre-ordered the gold standard? Just one?
Nice.
All right. Okay. Okay, we got a few in the back, right? That's probably a fun one. I mean, we get to imagine a world where actually we went back to the gold standard. We'll be waiting for that book to come out patiently.
Thank you.
Yeah. Let's talk about Fiat Standard a bit, though. I mean, not the book's Fiat Standard, but like the whole Fiat Standard era. A good friend of mine said that we cannot have all the nice things we have without inflation. And one of my arguments is the one that you just made, that a lot of things that we have now, that we have today, are mostly just like momentum from the gold standard era, right? The inventions that we keep pushing forward. Humanity have to keep pushing forward. But if you really look at it, closely enough, and you see that it's going to get harder and harder to keep pushing forward into the future now that we have destroyed most of our savings, most of our capital goods all over the world with the fiat currency, with money printing. Yeah. Is that also what you think of the Fiat Standard? You mentioned that it degrades humanity. In what ways, specifically, do you think that it has perverted the world?
Yeah, I think so. I mentioned the issue of innovation and creation. I think this is, there's some truth to this. The way that, I think a great way of thinking about the Fiat Standard comes from my third book, Principles of Economics, where in Principles of Economics, what I do is I begin by explaining the Austrian approach to economics, and then I start building up the topics of economics from the starting point of human action all the way up to understanding human civilization, economics as a framework of understanding human civilization. So I begin by explaining work, labor, and then property. So first humans can work, all animals can work too. But then humans develop the concept of property, which most animals don't have. And then humans develop the concept of capital. We start inventing capital goods. So each one of these is one chapter where I discuss this concept in detail. And then we develop capital, but then we develop trade. We start trading with one another, and that allows us an enormous increase in our productivity. And then after that, we develop the ability to start living in a market system where we trade extensively with impersonal order, where people we don't know, we trade with them. We also use energy more, and I have a whole chapter dedicated to explaining how human prosperity is through the increase of consumption of energy. The more energy you consume, the more you are able to meet your needs. And this helps us understand the modern economy as being a place where people have high energy, high productivity, high capital. And if you understand these basic building blocks, you understand how a market economy works. And that then generates the topic of money, because that market economy runs on money, because people are able to trade thanks to using a medium of exchange. So we get into money. We discuss Austrian economics, business cycle theory, and explain how money functions and then how money falls apart, and explain inflation and the damage from inflation. And then after that, I look at the question of government, defense, security. And I argue that there is, de facto, there is always a market for security. And government is just an imperfect provider of this, which mainly provides security for government rather than for people. And then I explain, how the Austrian approach, or the anarchist libertarian approach to understanding government. And, I make the case for monarchy. I think people here would like that. I'm also come from a monarchy, and I very strongly support and endorse monarchy generally. Well, no, not always and not strongly, but I prefer monarchy over democracy in general. And I think you look all over the world, you see a lot of living examples of countries, next door to each other, and this one has a king and that one has democratic republic, blah, 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 something or the other. And you always want to be in the monarchy in these situations. I make the case for the key issue of government being about self-determination. And if government grants people self-determination, then you could claim that government is legitimate. Other than that, then it's just extortion and theft. So all of this is a long-winded answer to get to answer your question. All of these things that I mentioned now are distorted by fiat. And so I end the last chapter of Principles of Economics discussing how the introduction of fiat money affects each one of these topics. And so human capital accumulation is destroyed, the money supply is destroyed, the business cycle is created, humans' ability to work is destroyed, people have recessions and money is devalued and jobs get cancelled because the calculation, entrepreneurs are unable to perform economic calculation. And ultimately you see that all of this edifice of human civilization rests upon our ability to have monetary economy. If we don't have money to coordinate our activity, we go back to being small tribes of monkeys fighting each other. That's really ultimately what it comes down to. Only because we have money, we're able to all trade with one another. We're able to trade internationally. We're able to cooperate. We're able to understand that investing in cooperating with others is better than trying to fight them. And therefore, we start to focus our time and attention on investing in the long term and trying to be productive in the long term rather than fighting and being brutal to one another. So all of that leads you to really appreciate, I think, what the destructive impact of inflation and in particular government money is. It destroys all of these things and therefore it slowly unwounds civilization. And I think you could say, looking back historically, looking back at the 20th century, you could make the case that, I mean, in the first half of the 20th century, up until 1950, you would be excused to say that, look, inflation has destroyed humanity and has destroyed human civilization. Because for the majority of humans, perhaps that first half century, from 1914 until 1944 at least, that period was just living hell. And things were bad. There was famine in a lot of places. There were diseases. There was war. And it was all fiat. Well, not all fiat, but to a very significant degree, that was because of fiat. It was exacerbated enormously by fiat. And you could say, looking at the framework that I present in the Principles of Economics and in Fiat Standard, you could say that this had really undermined all of those bases of human civilization. But then the second half of the 20th century, you could make a counter case and saying, all right, well, we dodged that bullet. A few 100 million of us died and lots of lives were ruined and destroyed. But we lived and here we are and now we have internet and we've made it. Congratulations. But then I think, the first quarter of the 21st century is making a lot of people think perhaps we didn't dodge that bullet. That inflation thing is still eating at the basis of human society and civilization. And inflation has accelerated in the last few years in a sense, particularly after COVID. And, wars and conflicts are accelerating and you can see how it's all tied to fiat. And it's continuing and it's exacerbating. And there's no way out, it seems. And if Bitcoin was not here, I would be very pessimistic about the fate of humanity. I would think we're just going to continue to witness the reality frustrates us, and we're unable to draw the connection between the cause, which is inflation, and the effect, which is all of these incredible catastrophes happening all over the world and all of these lives getting destroyed. People are unable to draw the chain of analysis required to make this connection. Most people don't have the intelligence it takes to be able to hold a chain of thought this complicated. And so people are going to continue to push for more inflation in voting for politicians that are inflationary. And they will continue to suffer from the effects of inflation. And that's really very bad news. But thankfully, we have Bitcoin. It's going to save the day. So relax.
Thankfully, you have to
don't
realize,
relax. Yeah. Stay paranoid, but
you have to realize how amazing that is. Think of a world where we don't have a way out of all of this. In a world where I mean, what would the world be, say, 10 years, 20 years from now under the fiat system? And you paint a picture of the Bitcoin standard world, you paint a picture of the world under the gold standard, but you think the fiat standard could exist for like another 50 years without blowing up into a mess of hyperinflation everywhere?
I'll tell you, if you asked me at the beginning of the 50 years, can it exist for another 50 years? Then I would have said no. But here we are. It's been around for more than 50 years. So it's tempting to say that no, there's no way. But in the fiat standard, it makes the case for why it can actually persist indefinitely. And I think Bitcoin's way of winning is not going to be that everything falls apart and Bitcoin comes out as the only thing that survives an apocalypse scenario. I think Bitcoin just continues to grow and the dollar just continues to decline, and eventually the dollar economy becomes smaller than the Bitcoin economy, and then we get a tipping point at which people just flock to Bitcoin and Bitcoin continues to get bigger, and at some point it's a lot bigger and the dollar becomes inconsequential.
So here we are, and this is a recurring theme. A lot of Bitcoiner would gather and we would talk about how Bitcoin would fix its things, right? And I would get comments from, let's say, the outside or like people in still stuck in the fiat world that this is more like a cult. And actually the one person that a lot of people have been pointing fingers to as like the leader of the cult is you, because you bring in a lot of things that are like cult-like in terms of how people see Bitcoiners from the outside. When you're a Bitcoiner, you don't just talk about money, you don't just talk about sound money, you start talking about ending the Fed, you're talking about ending government, then you start eating meat, right? And then you start working out and you start getting more sun, and these are all kind of things that people who are not familiar with the Bitcoin community and the things that we talk about in the Bitcoin community, things that is it going too far, or is it related, or is just like these guys are being crazy? What do you think about that?
Yeah. Well, I always like to begin with. I like to answer this by saying, I've been a Liverpool fan for about 40 years. Anybody here a Liverpool fan? Yeah. And there's a guy wearing Liverpool in the back. He's not listening. Yes.
So you are familiar with being in the cult?
Yes, I am. But see, what's interesting here is that 3 people out of 100 are Liverpool fans, maybe 4. And, I've been, if I'm running a cult, you'd expect that these people would have started supporting Liverpool at this point. But it didn't happen. So everybody who buys my book does not end up supporting Liverpool. But a lot of people who buy my book do end up eating meat and basically believing that a lot of things are lies. They just stop believing in climate change, stop believing all kinds of bullshit. And I don't think that's just because of me and because of my book, because if it was me, I would have made everybody a Liverpool fan. We'd all be celebrating our title win last week. I think there's something very serious here that was there even before I had gotten into Bitcoin, which is that just in general, people who tend to be libertarian, people who tend to be low carb, there's always been overlap. People who are willing to question authority when it comes to government and government being able to rob half of your wealth every day are also likely to question government authority when government tells you eat 6 to 12 portions of poison every day so that you get stronger and happier. So it takes a certain mentality to disbelieve both. And if you're susceptible to being skeptical of one, you're susceptible to being skeptical of the other. And then that means there's an existing core of people that are into both things. And then people who get drawn into one thing are very likely to run into somebody who also has run into the other thing, and then they will explore it. So usually what happens is, you are surfing social media, you come across some meat influencer, and you start following low carb or meat related people. And then you start seeing all kinds of Bitcoin people. And you start getting Bitcoin content, and you go down the Bitcoin content rabbit hole.
Yeah, I mean, Dr. Sean Baker is holding Bitcoin.
Yeah,
right?
Yeah, I got him into Bitcoin a long time ago. I also got him into carnivore. I told him to go carnivore before he was carnivore. Always, we're going to be proud of this. But I think there's a huge overlap because fundamentally, There is this psychological aspect which lends people to both ideas. But I think there's something deeper, which I discuss in the Fiat Standard and which has led to the writing of another book called Fiat Food. A journalist called Matthew Lysiak, he read the Fiat Standard and it blew his mind. He didn't believe what I wrote about food. And he started researching it, and then he researched it and he found that it was true. And so he emailed me and he told me, I want to write a whole book about this. Would you help me out to publish it? So I did. So go check out the book. It's published from the Safe House, my publishing house, which incidentally soon we're going to start printing and shipping in this region. So you'll be able to buy it with very cheap shipping from here. We'll have my books available. So
it's one of the book in our pipeline.
Yes, you started working on it, right?
Yeah.
Yes. Okay. Well. Okay. Yeah. So I think what's the deeper connection here is that ultimately all of human history, the vast majority of human beings that have ever existed, have spent their life looking to do two things: trying to eat as much meat from the biggest animal that they can find, and trying to get as much of the hardest money they can find. This has just been what human beings have been doing. And only in the last couple of centuries with money the last century really with money have we started becoming having to collect Pokemon almost with money. You have different currencies for different things. So you hold gold for the long term, you hold real estate for appreciation, you hold the dollars for international trade, you hold your local currency for your local spending. And now everybody has to be a hedge fund manager. But historically, you just used the money. It was money, it was hard, it kept its value, and you saved it. And that's what everybody would try to accumulate. So there were two scoreboards in life, really. How much meat you can eat and how much coin you can stack. And the last century has...
And how much babies you make, too.
And how much babies you make, of course, yes. And this is historically always been the case. Now, the issue with money got distorted over the last century, as we said. The issue with meat has been distorted horrendously over the last century, mostly over the last 50, 60 years, particularly from 1971. But really, it's been getting distorted for thousands of years as humans have run out of animals because we hunted too many animals and we had too many kids. And then we started eating plants, apparently, which is just insane. Why would anybody eat plants? But for the vast majority of human history, nobody ate plants. We started using plants probably to tempt animals as bait for animals, and then we started getting really good at eating the animals. And so then we had to take our own bait. So we started eating our own animal food. And that's caused us to degrade terribly as a species. But anyway, that has nothing to do with fiat money. More concretely, historically, people have always looked for as much meat as they could. And even up to a century or two ago, food all over the world revolved around animal fat. So even everywhere in the world, people's food had to revolve around animal fat. And people tried to eat as much animal fat and meat as they could. And in the last 50 years, government propaganda has basically used fiat money to sell people the nutritional lie that meat is not good for you, and what's better for you is that you eat grains and that you eat plant protein. And this is terrible because this makes sense for them because this is cheap and this can be mass produced. It's not very elastic in response to inflation. So if the value of money goes down, it's relatively simple for junk food producers to increase the production of junk. It's much more complicated for real food producers to increase the production of real food. And so over time, the governments prefer to feed people cheap stuff because, meat becomes expensive. But if they tell you, hey, you know what, meat is bad for you because meat boils the ocean and cow farts are gonna destroy the planet, and it gives you colon cancer and it's bad for you because it makes you aggressive, and look at the beautiful cow. You want to be like the cow. Don't eat the cow. So just eat the same thing that the cow eats and just spend all day eating and pooping, and therefore, don't use your brain. And that way you get to eat cheap stuff, and then that shows up nicely on inflation. So once you break out of that fiat mindset where constantly your money is losing value and so you're constantly getting poorer, so you're constantly having to spend less money on the things that you buy, when you get into Bitcoin, you break out of the propaganda and you also break out of the economic cycle of inflation causing you to constantly try to degrade everything in order to try and survive. And now you start to upgrade things and you quickly realize that, yeah, I should eat more meat. And you start eating meat and you start feeling better. That's just the reality of it. And that's why you're gonna fall down that vortex eventually. And just like with meat and just like with Bitcoin, the sooner you get in, the happier you'll be.
Yeah. When you talk about meat, I mean, Thailand, especially Thailand, for the past few hundred years, most of our populations are mostly like serfs, right? So rice has been the mainstay of our meal, rice and vegetables and stuff like that. We eat fish occasionally here and there. But when you look at like all the historical records, you see that people in the higher echelons of the society eat more meat. They eat more animals product. They eat more fat. They actually don't eat as much rice. You know, that is like reserved for people who have to work and use a lot of labor. Do you think it has like anything to do with, you know, people who doesn't eat meat? You say that they don't become more aggressive. Right? They become less aggressive. They become more docile. They become easier to control and easier to you know, keep in line. They also make people weaker, right? So for the past 50 years, we have seen like the growth of the hospital and insurance industry feeding off from, you know, people just getting sicker and weaker from eating poison. Do you think that's intentional?
It's a great question. It's a great question. Honestly, sometimes you look at just how elaborate this enormous operation to poison humanity is, and you think that this can't just be all about money. Clearly, the money is almost like a detail compared to the attempt to just keep poisoning people with garbage and keep people eating garbage. I mean, it almost seems that way at some point, but who knows? I think it's, you know, there is the force of economic incentive out there. But historically, yes, you see this story has generally existed that when you had societies of serfs, the way in which you keep the serfs down is feed them grains. Feed them grains, that means they spend all day eating and pooping, and there's little time and energy for the brain to work. Look at the animals that eat grains versus the animals that eat meat. You look at the tiger, compare it to the cow. Big difference, right? The tiger, his eyes face forward, he can focus, he can think, he can hunt, he's strong. The herd animals, essentially, all of their body's energy goes toward the process of digestion. Their entire body is one big giant digestive system with a tiny little brain, tiny little everything else. And this is also true for gorillas and humans. Gorillas have massive bodies. They're much bigger than human beings, and they rely on eating plants. Humans have a much smaller stomach. We have a much more efficient stomach because we rely on eating meat. It is a lot more efficient. And so we end up being a lot smarter than the gorillas. So I think the feeding of grain is good for, you know, size and making people bigger. But it's not good for making people smarter, I think. Should we do Q&A?
What are your opinions on paper straws? Yeah, just a few more questions before we move on to Q&A, right? Where were we? Meat, right? I was a bit distracted. Yeah, they have this sugarcane straw which is a bit shorter than the bottle, so it just went right in, right? Okay, I totally lost my train of thoughts. Let's move on to another topic then. Yes. Maybe like the last one, and then we move on to Q&A. Right? I just want to touch on like the more political side of things, especially in the world right now. What was your opinion? What do you think about the latest U.S. election?
The U.S.
election. Trump, basically. Yeah. What's your stance?
I'm not an American, so I don't really have a stance.
No, I mean, I'm not American either, but when you think of how the U.S. government actually affects the whole world, right?
Yeah, I think it's pretty much business as usual. All of this bluster initially. If you happen to follow American sports like American elections, and you care about red team versus blue team, then this has been a great time because the red team has scored a lot of fun goals recently. But let's face it, realistically, when it comes to the real world, ultimately, all of that is bread and circus for low IQ people. What really matters is the money printer. And the money printer is going to continue to
It's still printing.
Yeah. So that's what matters. Everything else is bread and circus for low IQ people. What matters is that the money printer keeps rolling. If the money printer keeps rolling, that means everybody's getting poorer. And then they're being split into two teams of red and blue to fight with each other so that they blame each other for all of the bad things that are caused by the money printer. So all of the talk about things being different all of that talk has been put to bed now. It's very clear things are going to be very similar. There's going to be massive government spending, and likely there's going to be more war. The US government needs constant war at all times. It needs to always find reasons why it has war all over the world because it makes a lot of money from war. The best way to manipulate people into agreeing into money printing is to convince them there's an emergency. And the most visceral kind of emergency is that other people from the other tribe are out there, they're trying to kill us, and we need to kill them. So, it doesn't look good.
And what do you think about the whole movement thing about, strategic reserves talk in almost every country? Do you think that's a threat to Bitcoin, or is it just like a natural thing?
It's not a threat to Bitcoin, but I'm not very optimistic on the ability of these people to follow through. It's very difficult to buy Bitcoin. It's very difficult to make the mental jump needed to understand it. And it's very difficult to buy it and then use it to hold it long term and have strong hands, be willing to tolerate the volatility. And it's particularly difficult for people who are still shitcoining. And Donald Trump and the US government are still shitcoining at this point. So they have a long way to go with a lot of have fun staying poor and sorry for your loss along the way. They're going to keep their coins. I don't think they're going to be able to buy more coins. And at this point, they don't really have the political popularity to say that it was worth it. But I doubt they're going to do much more than that. And I think when the Democrats come back, which inevitably they will, they may reverse all of this. So maybe let's not get our hopes up too high.
Mm-hmm. Okay.
But Bitcoin still goes on with them or without them. Doesn't matter. This train can't be stopped.
Bitcoin doesn't need the government. Yes. Eventually, the government will eventually need Bitcoin. Right. So, last question. Just to follow up on our last interview, I think 5 years ago, you mentioned that you wanted to orange pill a football player from Liverpool. Have you followed up on that?
No, I've been trying. I've done all of the fanboy things to try and find a way to get to him, but I have not. I do have some other football players that have gotten into Bitcoin, and I've become friends with them. Stefan De Vrij, Inter Milano, they just made the Champions League final. He's a Bitcoiner, plays center back for Inter Milano and the Dutch national team. There's also Kieran Gibbs, who used to play for Arsenal. He's now retired, but he's a Bitcoiner. So hopefully, I'm just going to keep trying to orange pill more of these players until I find my way to Mo Salah.
Right. And who do you think would be like the most important people that you would want to orange pill? The same question as 5 years ago, 4 years.
Yeah. Well, I think Salah is still great now. He's won the league twice since then with Liverpool, so he's increased his priority. Mm-hmm. I also think he's got an enormous fan base. It would be great to get him and get people in the Arab world. And I think specifically people in the Muslim world and Arab world are going to, once Bitcoin clicks for them, there's an extra incentive to use it because it is not involved in interest lending, which is the case with government money. So once you're able to convince them that fiat is haram and Bitcoin is halal, then you're going to get a very large number of Muslims move at the same time. And when this happens, it's a big deal.
Right, thank you. And yeah, that's it. I mean, that's been almost 2 hours, and I'm gonna pass the mic to anyone in the room who wants to ask question. We're gonna have like a short AMA question session before we set Saif free and let him explore Bangkok a bit more. Can someone get a mic to the audience?
Oh, I was just going to ask, kind of my initial resistance to Bitcoin was I did see what you've been talking about, that it's this challenge to this fiat authority. And one of the surprising things, because I just thought they'll never let that happen. One of the surprising things to me is that they kind of have let it happen, and without too much of a struggle. How do you see this as we move towards a Bitcoin standard? Do you see that changing? Do you see them like having a more active resistance, choking off on-ramps, off-ramps, taxation? Do you see them going quietly or putting up more of a resistance?
It's I have to say, I think the amount of resistance that they have put up has been a infinitely tiny fraction of what I thought they would put up. I'm astonished that you got the president of the US out there shilling our bags for us. So if you asked me 5-10 years ago, I would have thought by now things would have gotten a lot worse, but they haven't. And it looks, I've been wrong before, so I may be wrong again, so maybe I shouldn't be saying this, but it looks like it's going to get easier and easier with time. It's now been normalized to a point where the world's largest financial institutions are offering it as a product. They don't do that if they think government is going to come next week and shut it down. So I think it's been massively de-risked politically over the last 5 years. I think, particularly around the COVID era is when people like me would have started to think, okay, well, they shut down the whole world and made everybody stay home. Maybe they are going to also do all kinds of draconian things to Bitcoin. Instead, MicroStrategy comes along, El Salvador comes along, Tesla comes along, and now ETFs and BlackRock and the whole financial world is learning about it.
In the first section, I heard about monarchism over democracy, right? What about minarchism? Are you stand over?
I mean, minarchism is less precise of a term than monarchism. You could say that monarchism is a form of minarchism, probably, because minarchism, it's more objective. I think, for me, the main draw of monarchism is the key thing, which is that people are long-term focused in it, in that the king expects his own grandchild to be king in the very long future. And so he needs you to get your act together, be a productive human being, have a family, have children, so that they can get their act together, so that they can be productive human beings, so that they can have a family and have children who will grow up to pay taxes for his great grandchildren. So his interest and your interest are aligned. He wants your great grandkids to be happy. You want and you want your great grandkids to be happy, because he's got the long-term perspective. The problem for me in democratic government is that you're constantly replacing a monarch with a multi-century perspective with a leader who has a 4-year or 5-year or 7-year term, maybe 10, maybe 15, whatever it is. He knows that this is his time to take care of himself. And so he needs to, for him, it doesn't matter how good your great-grandkids are. He's not expecting to be able to force your great-grandkids to pay his great-grandkids money. For him, he needs to make the most out of you today. So he's going to take all of your things today. And then when he leaves after 4 years, guess what? There's a new nice guy in the job now, and now he wants to take everything you have, because these are the only 4 years he has to enrich himself and his kids and his grandkids and his great-grandkids. So overall, you end up with, every year you get a stupid popularity contest, and you get a new thief to steal you everything you have every 4 years. That's what you end up getting with democracy. Whereas with a king, you just end up with peace and you are generally left alone. If you look in the 20th century, you see democracies have had higher inflation than monarchies. They've had higher taxes. They've had more conflict. They've had more wars. They've had more everything. Monarchies have generally been a lot better. Obviously this frustrates people who want democracy and people who just want to be main characters and they want to be president and they want to be prime minister and they want to work blah, 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 blah and talk and so on. But practically speaking, after a whole century, you were better off sticking with a king.
Thank you. And for about this case, can you explain what happened to the North Korea and the South Korea?
Yeah, I think the key thing to keep in mind is that North Korea is not a monarchy. There is no legitimate claim to being king. The whole thing is still called Democratic People's Republic. So it's all about this process, and it's not. It has not provided the leaders with the same kind of long-term perspective that a monarchy does, because a monarchy is me and my children and their children will be kings forever. Whereas these democratic revolutionary regimes are still short-term, insecure, and not certain to last for a very long time.
I think the ability to print money is also important.
True.
Okay, let's get back on your conversation. You mentioned about the tripping point. Right now, the Bitcoin will become more value more and more, right? And what about the gold and the other asset will lose their value to Bitcoin? What do you think in the future will happen after that?
I think gold is going to become an increasingly industrial metal. It'll become more and more abundant. All of these massive amounts of gold bars that are out there held as money are going to be converted into jewelry and spoons and ashtrays and side lamps and nice things to look at. And so our natural environment will become much more abundant with gold, but our checking accounts and cash balances will not. And that's what I think is already happening with silver now. The value of silver used as money is very tiny compared to the silver that's being used industrially. So most of us, real estate, I think, will become more and more affordable. It will become a consumer good like all other consumer goods. It just keeps getting more affordable and better every year. People are not buying houses as saving accounts. People will buy houses as houses. And so they're continuing to get better and cheaper over time.
Okay, let's jump back a little bit about your books. If you could get every world leader to read just one chapter from your books, either it's on the Bitcoin Standard or the Fiat Standard, which one would it be and why?
Which chapter from both books?
Yeah, just one book for the every world leader.
One chapter or one book?
One chapter from either the two books.
It's a tough one.
Yeah, it's a bit tricky.
Yeah, I think maybe chapter 4 on government money, maybe it might be the most relevant for people who are in government. 5 is, the time preference is very good, but that's more likely to help them sort out their own private lives without connecting it to the rest of the topic. And we don't want them to become better at their life while they are in positions of power over others. Right, so I'm thinking that might be dangerous as a one. Chapter 6, yeah, that's useful, very useful for most leaders. 7 is probably going to get them to want to kill me, so probably let's not do that. The ones on Bitcoin, hard to choose one. You can't just go with one. Tough question. I think I'll go with chapter 4 in Bitcoin, in the Bitcoin Standard.
Yes, I want comment about the argument between two paths that Bitcoin can go. The argument between the Jack Dorsey and the Michael Saylor. The Jack that believes that the Bitcoin need to be used in transaction as money to be successful, versus the Michael Saylor that think is a pristine collateral. Yeah. So if Bitcoin never been used as money for transact and just be a pristine collateral, just as Michael Saylor said, do you still think Bitcoin is successful? Because right now we see about Bitcoin treasury companies, we see that the world and the company gravitates on the idea of Michael Saylor that Bitcoin should be used as a pristine collateral. And you also mentioned about the Tether, and the dollar backed by Bitcoin is also the idea of the pristine collateral that dollar will need to use the Bitcoin as the collateral to back their values. So I think my question is, do you still think Bitcoin will be successful if people don't use it as money, but just use like Tether or dollar? And we might be on the Tether standard more than Bitcoin standard, just because you've been used in the collateral.
I think there's no contradiction between the two, because I think essentially the only way that people will use something as money in a very real sense is when they develop large cash balances in that thing. And the only way to develop large cash balances in that thing is for people to buy more Bitcoin and watch as the Bitcoin value goes up. So people need to hold it as an asset, and as it appreciates more and more, it becomes more likely to be accepted as a method of payment. And then over time, it becomes more and more the preferred method of payment as its market value goes up and its market share increases. So this is how I think it's ultimately going to evolve. Money doesn't get chosen, as we were discussing earlier. It's not a choice of government. The government doesn't wake up one day and decide, all right, you have to use this yellow thing as money. The market chooses the thing as money because it is the thing that works best as money. There's a reason they use aluminum for airplanes. There's a reason they use glass for all kinds of things. This is the thing that does the job best for the functions that are intended. And so what ends up doing the job of money well is the thing that ends up having the most cash balances. Why? Because when people will trade, they will trade the thing of which they have the largest sum. And that thing will become the thing that holds on to its value better, because if the thing loses value over time, then the cash balances in it will go down in value. Whereas if it goes up over time, then the cash balances in it will go up. So then smart people start buying more of it, and then its value keeps increasing further and further. All of this is to say that this is an inevitable process. As people accumulate more dollars, follow the Saylor strategy of stack more sats, they increase the size of their sats cash balances, and therefore they become more likely to spend satoshis. Now, that's unlikely to happen as long as we're in this kind of range where Bitcoin currently is maybe 0.5% of the world's money, 0.7% of the world's money. Arguably, but it's at most 1% of the world's money, depending on how you define money. So the chance of you wanting to buy something and finding Bitcoin in the cash balance of the other party in this transaction is approximately 1%. Out of all the money in the world, the person that you're buying or selling with is going to likely have an expected value of 1% cash balance in Bitcoin. So what are you likely to be willing to trade if that's the 1%? How much Bitcoin are you willing to buy or sell? He's looking to buy or sell whatever you're buying or selling. He's buying a car from you, or a sandwich, or you're selling him a coffee or whatever. He's looking to do things. He's not looking to change his position on Bitcoin. As long as it's just 1%, as long as it's a small fraction of his cash balance, he's not carrying out a foreign exchange transaction. He's looking to give you some of his main monetary asset, which he has likely 99% of is in dollars or dollar-denominated currencies. So that's what he's going to be foregoing. He's going to be foregoing some of the stuff that he has a lot from, and getting in return something for which he has a need, from which he gets a better utility, a coffee or a burger or whatever. So as long as he can get away with spending the dollars, he's going to continue to spend the dollars. And as long as 1% of cash balances are Bitcoin, we're going to all be spending dollars and dollar-denominated currency. If you want that to change, you need to stack harder. You need to stack more satoshis. You need to tell your friends to read the Bitcoin Standard. You need to get really working. There's no alternative. We need to pump Bitcoin up until we have about a $200 to $300 trillion market cap. Then you can have your coffee in Bitcoin, okay? Until then, you're not hodling enough. Stop asking me this question.
Can we have like one more?
Yes.
We're about to do one or two more questions.
Okay.
All right. As you mentioned before a bit about the Islamic perspective, like you said that the Bitcoin is halal and based on the Fiat Standard is haram, right? So if we, see on the modern financial perspective, it's undeniable that, everything is based on the interest. So my question is, how can Bitcoin support an interest-free or low-interest economic system?
So this is something that I discuss in Principles of Economics. Principles of Economics is mostly an Austrian textbook that repeats most of the ideas of people like Rothbard and Mises. Particularly, I would say the two most influential authors for that book are Mises and Rothbard. And third would probably be Hoppe. But there are two, maybe three main deviations from what they would write that I mentioned. The first one is chapter 3 on time, explaining the economics of time, which I use as a framework for explaining all of economics. I explain all of economics in terms of economizing for time, which I think is not something that the Austrians generally do, but I find to be a very useful platform for doing things, for doing an economics book. And the second one is the economics of energy. But then the third one is the economics of interest. And generally, the Austrian school are the ones, in my opinion, who have provided the economic answer for why interest exists. It's the real explanation for why we have interest and why we have it in a market. And I think they provide the best explanation for why banning interest has usually created problems and why it's better to have a market in this stuff. However, what I contribute as a new thing, which is a little bit too complex of an argument to get into right now, but I would urge you to look into this chapter. It's chapter 14, I think, of Principles of Economics. And it's also available as a lecture, which I gave at the Property and Freedom Society in 2023, I think, or 22, no, 23 or 21. I gave this talk at the Property and Freedom Society in which I discussed this paper, where I make the argument for, what the Austrian argument for interest rate is. The Austrians say is that interest rate is a reflection of time preference because people value the present more than the future. There's always a discount on the future, and that's what is required to get somebody to forego consumption today in order to give it to somebody so that that person could have the consumption today and return the debt into the future. That's what creates an interest. So my argument is that, and then another thing that the Austrians say is that as time preference declines, civilization advances. And as civilization advances, time preference continues to decline. Because as people have more resources, they have more capital, then their quality of life improves and they're able to save more. And as they're able to save more, they become more future-oriented. And they become better capable of providing for the long-term future. So they start thinking about a more and more distant future. And as time preference declines, meaning as future orientation increases and as people become more and more future oriented, the price of the future essentially becomes higher, and that the discounting of the future declines. And so people become more and more oriented to care about the future. And as a result, the interest rate goes down even further and further. And so historically, if you look at about 5,000 years of data, you see that interest rates have generally been going down historically. And the lowest they had ever been was at the turn of the 19th century. At the beginning of the 19th century, where interest rates, the lowest interest rates recorded in history, were the Bank of England interest rate of about 2.5%. So if that had continued for another century, and that's what I discuss in the Gold Standard book, which I'm going to be publishing soon, and that's no, actually, wait. I think the talk that I gave in Property and Freedom Society was in last year. I think 2024. You can find it on my podcast if you just Google Saifedean, the Bitcoin Standard podcast, interest or property and freedom society. You'll figure it out. So anyways, my argument is eventually the time preference declines so much that interest rate becomes very low, that the interest rate dictated by time preference is lower than the cost of holding money. Because holding money always involves a cost. You need to buy a safe, you need to buy a cold card, the hardware wallet. And because it contains that cost, eventually it becomes cheaper to lend it out. So then you're happy to take it at zero. So what this is saying is that a low time preference society, which is a future-oriented society, which is a highly moral society, is likely to be a zero interest rate society. Not because government bans it, but because everybody's time preference is very low, that it's practically indistinguishable from zero.
One last question.
This might be kind of a nerdy question about the Austrian economics. I just want to talk about the Austrian business cycle theory. I agree with what you said about the importance of capital goods and the depletion of capital goods that leads to most of financial crisis. And the problem that I see is that maybe some Austrians that I have heard from YouTube or from lectures when they explain about the Austrian business cycle theory, they often say about the artificially lower interest rate, and then they go to like saying that because we have artificially lower interest, so banks just give loans more, and then when in the end when we all run out of the money to lend, so the economy crash. But I agree with you that we should focus more on about the capital goods, not the quantity of money being used in the system. So I want to ask you, why didn't the Austrians focus more on about this capital goods aspect? Because what really matters is the real resource, not the quantity of money.
What do you mean, why don't they focus more?
They just generally they would say that it would cost more investment, and then when the economy runs out of the money to borrow anymore, so everything stuck and the economy crashes. But they didn't focus more on about the capital goods, that it is impossible in theory to maintain that economic status, because everybody would come to grab resource and use it for investment and for consumption.
Can you be more specific about who are they?
I've heard when some
Rothbard or Mises?
Oh no. In general, Austrian explanations.
I honestly don't know. You can read my book and read my explanation. Yeah. So, I mean, I have a whole chapter on this. I don't know. I don't quite know what you're getting at, but no, I think it's the key thing is that I think one way of understanding the scam is that the Keynesian perspective makes you think that all of these big numbers on the screen of money moving around is what's feeding people, and that's how you do an economy. You know, you sit down and you let the money printer go brr, and then everybody has money, and then you get an economy. But the Austrian perspective makes you realize it's the other way around. It's people have to first stop consuming the things that they want to do. They have to learn self-control and delayed gratification, and then you start getting nice things. Then you invest, and then you get capital goods, and then you get more real things. Okay, thank you very much.
That's all the time we have for today. Thank you, Saif, for coming here. Thank you. Yeah, and after this, you have a few more interviews, so I better get you to it. Right, cool. That's it. Thank you, everyone, for coming this evening.